Quick disclaimer, this video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing here should be considered financial advice. Always do your own research and understand the risks before investing.
Welcome back everyone to another Bitcoin update. So here we are. We had a nice move from Bitcoin today in which we retested that April low, and as well as this added trend line that we were talking about in the last video of where we saw a possible rejection from. Now we have two scenarios that we have been tracking since pretty much this early February mark of this low is a corrective A, B, C, and an A wave for a white wave, in which we could get a B wave corrective move and then a C wave up before getting a rejection. And in our orange scenario, we have been tracking just a fourth wave corrective bounce before heading for one more low. Now, if we go to the shorter time frame, these are our invalidation points for either scenario, or indicators, I guess you could say. Our first indication for that white A wave to be happening is obviously a break above these rejection points on the chart and of our trend lines. That would be our first indication to get a sustained break, maybe consolidate, and then bounce off it as well. And our first indication of this orange wave playing out, or not even orange wave, it could also be a extended B wave as well. Maybe we get one more low over there, but our first indication of at least that playing out would be a break below this swing low at 69,000 and a break below our trend line, in which we have constantly bounced off of. Now we could always sell off, break below, retest the trend line, and then bounce back up, because that could technically form a 1-2 setup, but it would also just look very ugly to see that as well. And otherwise, for that, if we go to the shorter time frame as well, we have seen a bit of a sell-off, and it was about that point in which we were talking about for longs and shorts of liquidation around that 70 to 75,000 range. We could have said this still is in play too. We could always get one more high, liquidate the shorts, and then head lower as well. That's always possible as well. But we have seen a bit of a sell-off these last couple of hours, in which we could have formed a possible smaller 5-wave move on the time frame. Maybe it could be a 1, 2, 3, 4, and then if we get one more low, that could be a 5-wave, micro 5-wave move down, very small, but not super convincing just because it's on the super smaller time frame. But as of right now, it would have been nicer to see consolidation and then a rise up, rather than just such a direct sell-off like this. If we go to past direct sell-offs, is what we would want to see is a bounce of interest, and we just haven't seen that with the sell-off. Usually something like this, after we have a large sell-off, we could have a quick bounce like that, but so far it kind of seems like we haven't seen that, and we could be heading lower, obviously. Now, that's pretty much it for the technical part and for our indicators. Otherwise, there isn't really too much to talk about for that. Break above these lines, well, could be a liquidation to liquidate shorts before we head lower. Otherwise, it could be a more sustained A, B, C corrective move, in which we could enter that 80, that high 70, 80, low 80 range here before we could possibly get a B, C corrective move and then head higher in that C wave. And for this orange scenario or extended B wave, we need to see a break below that 69,000 level, just because we've had a larger sell-off instead of consolidating. It isn't enough to say that we can't just bounce from here and go for another high, especially because we could have had a lot of FOMO in from the market, from retail, and with the weekend coming along too, it could be possible we do head a little bit lower, and then maybe during the market open on the Monday or Sunday night for some people, and then Monday and Tuesday, we could also see that sell off as well. So that's it for the technical part. If we go over to the RSI, which is something I wanted to point out, this clear somewhat of a divergence here, which we could have seen on the chart. It is slightly broken, just a little bit heavier over here, but we do see a possible double top on the chart where we could have had a top here and we could have had another attempt in which we could be selling off right now. And on the RSI, it obviously shows a weaker strength in this rally compared to this one up here. Even this whole rally here compared to this one, you see a straight rally, and then for here it's more of a choppy sideways consolidate and then move up, but obviously it doesn't invalidate it at all. If we compare the volume to this pump over here compared to this one over here, we see larger volume blocks in shorter amount of times. Well, for these ones it's shorter blocks but larger amount of time, so that could also somewhat align with stronger volume over here in shorter time rather than these ones being weaker volume spread out through time. Now if we go over to the hour RSI as well, you could also say that this could be a divergence as well. However, after being oversold on the hour, I myself obviously don't, not financial advice for anyone, by myself, after we get oversold on the RSI, I typically like to see this just as a reset, and the past developments of these aren't as useful, but obviously that's not always guaranteed, and this could 100% be useful as a bearish divergence here for that as well. Now if we go over to the 30-minute chart as well, it's just another thing that I want to show. For the volume back here is just so much stronger for longs compared to this rally. It's just so much weaker, except for this part over here. We did see a FOMO event for that as well, and then obviously we've seen large sell-off on volume as well. I mean, it almost seems like we've had more selling volume during this corrective rally than what we had over here, and that could also form a bearish divergence in which we were talking about. So if we go over to the daily as well, something that we have been talking about since this range up here is this trend line on the daily, in which we've gotten rejected from multiple times. Here at 79, here at 75, here again at 71, this one at 70, and then if we do retest that trend line, if that trend line were to play out, we could get that rejection around the 65 to 70 range before we head lower, which could align with that orange fourth wave in which we get a corrective bounce, because like we were saying, even for that orange fourth wave is we could still form that A, B, C, and that A wave for the white wave, and if we don't hold B wave support, well, that would keep the orange fifth wave to the downside validated for one more low. Now if we go over to the leverage, if we restart this, on the 30-day, we have almost double, or more than double. If we have 7 billion here, 2 billion here, yeah, we have almost triple, double or triple amount of longs compared to shorts. That 72,000 range in which we had that range of what we were talking about in the last video, of that higher amount of liquidity there, has been hit. Now we do have these ones here at 74,000, which is why I said, I mean, if we do have that larger pump in the shorter time frame, maybe a weekend pump before having a Sunday and Monday early week sell-off, that is always possible as well. Obviously not guaranteed, but it wouldn't be surprising to see one more quick move up to liquidate these shorts before possibly turning over here. Our first target would obviously be these larger zones here at 70,800 and this larger one here, which is at 68,686. And all these ones are smaller amount of liquidations, but that could always be in play. Like we were saying, that 60 to 63,000 range could also be in play for that B wave extension, so that wouldn't be surprising to see. On the daily, I wouldn't really take this too seriously, but maybe just with the weekend coming up, if we do not get a weekend pump for some of these other shorts over here, we could see a sell-off or maybe consolidation before we see a sell-off, and that sell-off could see us targeting that 68 to 70,000 range for a shorter time frame. And obviously on the 7-day as well, heavy shorts. So not guaranteed, but it is just slightly more in favor of short positions as of right now. Obviously, these could easily get a bounce to 75,000 to liquidate these before heading lower, or maybe even to that 80,000 range if that A wave is indeed playing out. But it is something to watch out for and definitely take into consideration if you plan to do a long, just because of these liquidations that we had here. Now, it could be possible that we do reset, or at least go to that 68,000 range to form that 1-2 setup before we can have that impulsive third wave up, where we could definitely see more liquidations, because as we go down here to 68,000, shorts would obviously be building up as well. But it depends. We will just kind of have to wait and see for price action and see how the market and liquidations and leverage and the analysis is looking there. Now, if we go to the heat map, this would kind of be this final thing. If you haven't seen some of our Twitter posts, we have been kind of talking about this for the last couple of videos, and also on Twitter post as well. Once this loads, here we go. Now we can see we've had that rally up. Like I said, short-term rally. It is still in the books that we do get that smaller rally up here to liquidate that 75,000 range, maybe even higher to possibly 80,000. But these longs here, or shorts, or sorry, longs that are building up here at 63 to 65,000 range, or 66,000 range, is definitely always in play, which actually aligns pretty well with our trend line as well, in which we are showing too. And then obviously that smaller degree, 68 to 70,000 range, is always in play. So yeah, that's pretty much everything for this video. We kind of just have to let time do its thing. Although the pump was very nice to see, we are starting to see some indicators in which this could have been a fake out pump, and we could definitely be retesting or going back into range movement as well. But obviously none of it is guaranteed, and we will just kind of have to let time do its thing. So yeah, that's pretty much everything for this video. Weekend's coming up and we'll see what happens. So thanks for watching, and we will see you next time.